It's Sunday afternoon and I'm trying to prepare for the week ahead, so doing a little bit of research, seeing if I could find some trades. I've had a few questions coming up about how to time exits, so I want to try and incorporate that lesson into the video. Then, of course, we're going to try and find a stock for the day that sets up well for tomorrow. So, first of all, let's start with Friday's pick of the day. STX, Seagate Technologies, was the pick of the day. Posted it before the open, about an hour before the open. Really liked this horizontal breakout. Love these stacked green candles with little to no overlap. That is a sign of strong trend strength. Long green candle closing on its high Thursday. Friday, boom, here we go. Off to the races again. You can see long green candles stacked. When you see this, that tells you that the trend strength is extremely strong. You can see the top right in there. Then all of a sudden, you start to pull back. You had to take profits on this one. Now, this is a little bit of an unusual pattern. Typically, when you see long green candles stacked like that, first pullback will be a buy. Boom, 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 boom. It continues to move higher. I'm going to come back and talk about this stock a little bit because we do have some signs where it tells you that, yes, you should be taking profits on this, and I'll show you what those signs were. But normally, first pullback is going to be a bullish flag, and then see you later. It's going to stage a second and maybe a third leg higher. So we know we like the daily chart there. Yes, there was plenty of money to be made on Seagate. If you had bought that anywhere near the open, you had a chance to get in somewhere around that 108.80 level. Stock went all the way up to $116. If you are not taking profits on a move like that in 10 minutes, shame on you. You've got to get out of that position. So let's take a look at the market because everything that we do starts with the market. We're taught that for our stops, in many, many books, they have a mechanical process. It tells you how to position size based on the average true range for the stock. The more volatile stock, the fewer the shares you do. It also talks about having stop losses that are half as big as your target profit. So you risk one to make two. You need to have at least a 50% win rate. These are some of the common themes that are constantly talked about in trading books, and I find myself having to deprogram everyone because I get this question and I'm telling you 10 times a day, oh my gosh, how do I time my exits better? I'm keeping my stops tight, then when I get stopped out, the stock runs higher. Or if I don't have my stop tight, the stock falls back and it keeps on falling, and then I take a bigger loss than I should have. Or I'm trying to do the prudent thing and I'm trying to take profits as the stock is moving higher, but then I look at the stock 10 minutes later and I left a lot of meat on the bone. In fact, I probably left more meat on the bone than the gains that I took. So, what the heck? How do I make sense of an exit? Well, the first thing that you have to realize is that every trading day is different, every stock is different, and the market is dynamic. So, to have a stagnant or a fixed type of mechanical process to your trading, I think, is the wrong approach. Now, what's the right approach then? There are many variables that come into play besides price that you need to take into consideration. In fact, price may fall somewhere down the list as far as maybe the second or third most important thing that you need to be watching. So the first thing, and you know this from all my videos, market first, market first, market first. So let's take a look at the longer term view of the market and let's try and get our bearings because that sets the tone for what our expectations are at the beginning of the day. So I'm going to go into a daily chart. We're going to take a look and let's zoom out a little bit because that will also give us more information. So throughout the course of the year, dip, rally, dip, rally, dip, rally. I'm seeing a pattern. Dip, rally, dip, rally, dip, rally. The entire year, strong upward sloping trend line. Dips are very brief and very shallow. As soon as major moving averages are tested, off to the races. Tested, off to the races. So we need to find where these sweet spots are in the market. And if I look at it, there's a dip. I can be more aggressive with my buying once support is in. Be more aggressive here. Be more aggressive here. Be more aggressive here. The whole way up. Once you get a nice big pullback like this, you get a retest with a higher low, double bottom, downward sloping trend line, breakout above the 50-day, and off to the races. And we'll see it clearly when I go back to my normal view. There's your downward sloping trend line. Beautiful big candle right here. This was a bullish trend day. Open near the low, rally, 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 close near the high. That's what leaves a long green candle. So if you're looking at the chart and you see that, hey, we've had a little bit of a dip here recently, now there's a major moving average. Here I get my nice support off of that major moving average. I can expect a bullish trend day. I might want to stick with my positions longer during the day if I have one of these formations. Hey, I might even want to keep some overnight longs because I can expect a gap higher the next day with some follow through. There's my dip. There's my long green candle. Hey, an hour into the open, we're having a bullish trend day off of a big market pullback. This could be a good one. I probably want to ride that. Oh, hey, an overnight long. There we go. And a little bit of follow through. You see that everywhere. Boom, boom, boom. This is where you want to be aggressive. So as you're coming into the day, you're thinking market pullback, major support level. Then here is a gap reversal. So it opens on the low and spends the entire day buy, 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 buy. On days like this, when you're trading your stocks, let it run. The stock is going to have a strong market tailwind to fuel it higher. You just have to make sure that the stock has relative strength. So as soon as we get into this pullback right in here, multiple support, now all of a sudden we've got a higher low, double bottom right in here, bullish hammer, gap up, bullish trend day. Hey, awesome. Hold overnight. There we go. Now we're through the 50-day. Downward sloping trend line, breach the upside. My point is this. After a drop like this, you're going to get a very furious amount of buying that's going to fuel the market higher. This is where you want to be looking for bullish trend days. So get long and try to stay long. Now, on the other side of the coin, let's say that you come in and you start seeing, hey, we had the pullback. Now we're at a new relative high. We just broke out. But look what's happened all the previous times. The market starts getting into these tiny, tiny little candles, compressed daily ranges, not a whole lot of momentum to them. So when you come in on these days, you have to expect that, hey, the move has been made. We just made a new high, and now the candles are compressing. That tells me that buyers and sellers are in equilibrium. I'm going to have tight daily trading ranges. I may even have an inside day where the prior day's high and low are preserved. Those are signs that you need to set passive targets during the course of the day because you are not going to have a strong market tailwind. The stock is going to have to do all the heavy lifting all on its own. Breakout to a new high, tiny candles. Breakout to a new high, tiny bodied candles. On what? On light volume. That is garbage. Those are very tough markets to trade. So as you come into this trading day right here and you've seen this garbage the last few days, your mind should be going ding, 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 ding. I can expect a tight trading range. That means I need to reduce my trade count. I need to reduce my trade size, and I need to set passive targets because the stock is not going to be in go, go, go run mode as it would be if we had a bullish trend day like this off of market support. So the first thing that you have to consider is what is the market doing? And it's not just what is the market doing on a daily chart, what is the market doing on a 5-minute chart? So let's go back a couple days because I really want to impress this point. So let's say that you come in on this trading day right here. All right, and we'll zoom out to a 15-minute chart because we want to make sure that we have as many days as we can to just take a look at the price action. But you come in on this particular day. What do you see right out of the gate? Mixed green and red candles. Absolutely no pace to the market at all. You can see it's an inside day. The high from the prior day and the low from the prior day are preserved. Inside days, no bueno. Not a lot of price movement intraday. So that means that you're going to be trimming your trade count and your trade size. Oh, but hey, look at here. There's the prior day's high. Boom, long green candle. Hey, what do we got going here? This looks pretty good. So I'm going to go into the 5-minute chart. This is the price action from Friday. Everything looks pretty normal in here on Friday. We get a little bit of a gap up and then the price pulls back instantly. And then we chop around a whole bunch. There's not a lot going on. This is interesting. You get 3 red candles, 3 green candles. Okay, at this point, I'm thinking, well, we just erased that. So still nothing special going on. But then this long green candle through that high of the day, through the prior day's high, got my attention. And look at this volume, heavy volume coming into play. That is also a very important criteria. If you start seeing the market rally on heavy volume, like it did in here, and you get these stacked long green candles, which I'm going to refer to in a little bit, this tells you that the trend strength is extremely strong. We have a market tailwind. That means if I'm long stocks and I see the market putting this in, I should be willing and ready to ride those long positions until I see the market run out of steam, which everything in here gets okay. We'll get a little bit more into price patterns, but you can see here, long green candle, breakout to a new high of the day, and then we get more than half of that green candle is reversed. Still nothing too bad because here we follow up with a bullish engulfing candle. Hey, awesome, go market. Whoa, no. Now we start to drift and we start losing that green candle. When I see selling off of the high, right in here, right in here. Now I got another attempt at the high, instantly met with selling pressure. Now I know there's some resistance and the market has run out of steam. So if I'm long stocks and the stocks have not been able to advance with the market in here, and I start seeing the market kind of topping out, this is when I know I should start considering taking some gains. So let's take a look at relative strength and how that works. So market conditions, very, very important. Friday, the market is close to an all-time high. I love these stack candles. That tells me we're going to be in for a nice move higher. I'm going to be favoring the long side. I can let those stocks run a little bit because I don't have to worry about the market rug getting pulled out from under me. So now I'm going to take a look at STX and we're going to look for that relative strength. And I'm going to put an overlay of the SPY up, and then you'll be able to see there's the market chopping around very flat during the open. Not this stock. It's putting in these massive candles in here. So now the stock pulls back, and here is a tell that the stock is not something that you want to hang on to throughout the course of the day. Because what happened to the market right in here? If I were long this stock and I was willing to let it pull back because these are long green candles and this stock should be shooting higher, quick look at the daily chart. Super, super, super strong daily chart. But I'm in the stock and I'm thinking, hey, when the market does finally get going, this stock is going to go a lot higher. But it doesn't. Rally, rally, rally by the market. Rally, rally, rally. What's the stock doing? Nada. Nothing. Aha. That is a sign that I need to take my gains and I need to go to the sidelines because this strong market tailwind is not pushing the stock higher. That means that there are sellers, and every time the market rallies, the sellers are hitting any bid that surfaces. Then finally, There's the market peaking out. Here's your market pullback. As soon as the market shows any signs of weakness, boom, the bottom drops out and then it continues lower. But let's go back one previous day and let's take a look at the relative strength that STX put in the prior day. So here's STX the prior day, long green candle stacked, absolutely beautiful. Here's your tell. Market pullback. The gray line is the S&P 500. Market down, down, down. I'll put up the 1 OSI indicator too. I don't want to put up too many indicators because then they make the chart a lot more difficult to view. But orange line above zero, relative strength. So you get these beautiful stacked candles in here. Market down, 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 stock up, up, up. So when you see this, when the market's ready to make its next move higher, as long as we have that market support starting to form, market goes higher, stock whoosh, takes off. Look at that big market drop that we had in here. What did the stock do from here to here? Relative strength. That is the tell. When the market is down, sellers are going to be pounding every stock. Most stocks are in indices. There's a lot of program trading that goes on, short the basket, buy the futures, so forth and so on. But stocks move with the market. When the market is down and the stock does not sell off, you know that buyers are still lined up and the stock wants to go higher. That is our edge. So if you're in this stock and you see the market pulling back, like right here, you've got to try and weather this storm. As long as the market is able to find some support, you don't need to be stopping out of it right away. But this should be a big red flag for you, like, uh-oh, market pulling back. I need to maybe think about taking some gains on this stock. But you weather this storm, and now the market starts to move higher. You're rewarded for it. After long green candles stacked like that, and that type of tremendous relative strength, first pullback, always going to be a buy. There's your bullish flag, off to the races. You come in here, and now you're thinking, well, the stock barely was able to get through the high of the day. There's another market pullback. I've kind of weathered that storm, so I'm going to hang in there a little bit more. Oh, good. Good thing I did, because look, the market recovered, double low on the market right there. All right, good. Now I know that that support is pretty safe and I'll be able to weather the drops in the market a little bit more. Stock starts to grind higher. There you get another pullback in the market. It continues to push higher. Even here late in the day, it's continuing to go higher. So until the stock starts to show relative weakness, provided that the market is not going down, the market's holding the bid pretty well, you should try and stay with the position as long as possible, as long as it has that relative strength. But again, your relative strength in this particular case started to wane right here when the market lifted off. You can see the stock did not. Orange line below zero, relative weakness. Okay, I should get out of this position. Let's also talk about heavy volume. If you've got super heavy volume during the rallies, that's when you want to stay long that stock. On the declines, you want to see very light volume. So you can see here that you've got nice volume building up right in here through this entire rally. You get a little bit of a pullback right in here, tiny little volume. Okay, you get a nice big rally here to a new high of the day, get a little bit of a pullback here, tiny volume. So you want to make sure that the volume is heavy on these rallies, and then when you get these retracements, you want to see that volume come in. So when I'm looking for a stock, the first thing that I like to do is I like to go into a daily chart. I like to get a feel for what is the overall price action of this stock. What technicals has the stock gotten through? Right here we have a horizontal resistance level. Okay, so you've got a nice horizontal breakout. Put up the major moving averages. You're going to be above every one of these major moving averages. So those don't come into play. You've got blue skies ahead, no resistance, so that's all good. You've got relative strength on a daily basis, and there's your volume. So let me do a recap of what I like on stocks from a daily chart perspective. I love technical breakouts, I love big volume rallies, and I love relative strength on a daily basis. If I have those things intact and I've got a nice upward trend line going on the stock, it's of interest to me. What I'm not overly interested in are stocks that are kind of hovering around little breakouts and they're little pullbacks that you're trying to get long. So back in here, you've got a long red candle. The stock is choppy. It's up, it's down. It's not really doing much. Now it's hovering around this 100-day moving average. Well, I'm not going to give this as much credence because now it's up above, now it's below, now it's above, now it's below. When you're testing a major moving average like this on and off again for days in a row, it becomes less significant. Now, when you're sitting below a major technical support level like that, and now all of a sudden I just cleared an earnings before the open on this day. Now I've had earnings and I just cleared the 200-day, the 50-day, and the 100-day all at the same time. That's of interest and it's a clean break. We're not back and forth around that major technical resistance area. We are through, clean and through. So I like those types of breakouts. I also am more inclined to be looking for breakouts that are near an all-time high as opposed to bottom fishing. Now here you did have a nice clean longer term trend line that was breached to the upside, clear all the major moving averages, still within striking distance of that relative high. So everything is okay in here. But what I don't want to be doing is, and this is just a stock that comes to mind, I don't need to be bottom fishing down in here. You're down in here and then you get this long green candle. I'm not interested. That's just a one-off. And look at how much selling pressure there has been in this stock. So you got to be very careful trying to time stocks that are coming out of a base like this. But now that I'm on the chart, I'm actually looking at it. TLRY could be of interest because you're starting to see buying there, got higher low. That's nice, above the 50-day moving average, testing that 100-day moving average. So now all of a sudden things are looking up for the stock. It's not a flat out bottom picker where you've got a falling knife that you're trying to catch. This stock has actually put in a longer term base over the course of the month, and this is some fairly constructive price action. Long green candle, bullish flag. It's got to get through that 100 days. So I'm going to come over here just for my own purposes, and I'm going to drop that GTC alert line right above that 100-day moving average so that tomorrow, Monday, I'm going to know if that stock has broken through. But in general, when you're looking at stocks, technical breakouts, you want them to be super, super strong. Downward sloping trend lines are fine. Major moving averages also work really well, along with horizontal support and resistance levels. So we want the stock to have a big technical breakout. And I'm going to put up a stock that I'm going to refer to a fair amount, Netflix. I really like Netflix. Look at this solid upward sloping trend line that we have here. Let's draw that in. Let's drop a GTC alert line. It'll help me draw that. And we'll click there and we'll click there. Whoops, it's already through that. So I'm going to have to choose two other endpoints for this. But I'm going to click here and I will click right here. Now you can see that strong upward sloping trend line. You can see downward sloping trend line here. That's a bullish flag formation. There's your flagpole. Your flagpole could actually start back here. Now you've got a breakout above the 20-day moving average, which I'll put up for you, and you've got a breakout through that downward sloping trend line. Nice long green candle, excellent volume. You can see pretty orderly price action. So it's not up and down and up and down and up and down and choppy back and forth all over the place. Once the stock starts to trends nicely, pulls back a little bit, next trend, pulls back a little bit, bullish flag, bullish flag. This is nice, orderly price action. It should be ready for another leg higher. So let's take a look at the 5-minute chart of Netflix and see what we've got going on here. So we've got a market that's starting to lift off on Friday, and we saw these long green candles stack. This is the gray line, remember, this is the SPY overlay. Nice relative strength, orange line above zero, green candles stacked one on top of the other. Hey, I know this pattern. So price action is the next and final element that I want to talk about. Price action in terms of the different candles that you're seeing. Stacked long green candles, one on top of the other with very little overlap and consecutive on heavy volume. Again, there's your volume. Rally, 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 big volume. Aha, here we go. Sell off, sell off, sell off. Minuscule, tiny little volume. Ah, here we go. A little rally mode in here. Volume starting to pick up. Volume is another thing that you need to watch. Light volume pullback, nothing too much to worry about. Heavy volume rally, okay, I know where the buyers are. So with regards to Netflix, you can look at this on Friday and go, hey, first pullback's a buy after I get stacked long green candles like that. Okay, this is almost a bearish engulf, so that is a sign that there's some resistance ahead. So you get this big pullback, almost retraces that green candle, but boom, boom, boom. We're right back at it. There is your bearish flag, breach to the upside. All right, now we know we've got some more upside to this trade. Got some more nice green candles. Bearish engulf again. Another bearish candle here. All right, we're starting to get a little bit toppy. Nothing too dramatic. Now here is a nice long green candle that almost challenges the high. Whap! Bearish engulfing candle. Okay. Hey, I had a great run. I have a strong market. I have a super strong stock. So market hasn't quite broken out of a bear flag or bull flag formation. It's near the all-time high, so there is going to be some resistance on the market, but this stock is through a bear flag formation. It's above the 20-day moving average. It has a really strong daily chart, really strong trend line on daily chart. I've got stacked green candles on the S&P 500. I've got stacked green candles on the stock. So there's your red candle. Do I get out here? I mean, after making a nice gain like that, everybody's ready to hit the panic button, right? Wrong. You should stick with this because you got everything working for you. So now you get up here. Okay, here you can start to take some off, which by the way, it's always good to scale out of trades. If I see a long green candle, especially if they're stacked like this, I'm going to take some off right there. Pulls back, no problem. I still got more in my position. Okay, there's another red candle. And usually you're going to get 3 bearish flag formations out of a strong move like that. So you could say 1, 2, 3, but you're going to get 3 of them. So now I'm starting to lose the market in here. You can see market hit resistance. It made a marginal new high, but really barely any. And now you're starting to get a decent market pullback in here. I'm starting to lose the stock a little bit. It's starting to lose some of its relative strength. Certainly after that bearish engulfing candle right there, this is not a bad place to say, okay, I'm done with this trade. That was a super nice profit. So that's how you would manage your exit on this particular stock, but you're still going to want to keep it on your radar. So now you've got a downward sloping trend line that comes into play right around here. You've got the market. It's found support at that prior support level earlier in the day. Market's starting to recover a little bit, and the stock is starting to regain its relative strength. This is your entry point in here, but as the price unfolds, what are you seeing? Tiny, tiny, tiny candles. That tells you that there is resistance. There are profit takers. We're not seeing these long green candles any longer. So the gains from this point on will be hard fought. So those are the things that you need to watch for. We're going to go into the daily chart of Netflix. We'll take a look at that. One more time, strong upward sloping trend line. There's your support level right here, horizontal support. It's able to clear this horizontal resistance right here. That is horizontal resistance because it's the open of that long red candle. You've got a couple of other wicks that have been close to testing that high, and the stock has backed off of them until Friday. Now we've broken through that horizontal resistance. through the 20-day moving average, and we've got this bullish flag formation forming on decent volume. So I got all those things working for me. I like Netflix, but I would be relatively cautious with swing trades longer term because the market is at an all-time high. But I think tomorrow you could see a breakout on Netflix to a new all-time high. So it could get through this 690 level with any kind of decent market. By the way, I don't know what the market's going to do tomorrow because the futures are not open yet. But if I get a big market move up tomorrow and I see the stock plowing through this technical resistance, I'm going to take some profits off the table right out of the gate. That's the prudent thing to do. I want to make sure the market doesn't have a gap reversal, and I'll let the remainder ride. So I do have a position in Netflix, by the way. So that's what I'll be looking for out of Netflix. But on a swing basis, I do like the support level right in here, and we can hover over and find out when the next earnings date is on Netflix. Actually, it just had earnings on October 19th, so it's probably going to be sometime January when they'll have the next earnings announcement. So you don't have to worry about earnings at all. And you've got this nice upward sloping trend line that you can lean on. And this price point that comes into play is right around $650. So if you get any kind of pullback in Netflix, we want to see half of this long green candle preserved. So anything around the 670 level or higher will be fine because we're looking to sell a 650 put and buy the 645 put. Do that for a $1 credit. Try and keep it as close term as you can. I don't like going out more than 3 weeks. I believe we're going to continue to see nice, decent price action into year end for the S&P 500, which we need to look at. I had referenced a bullish flag formation. We have not cleared it, so I'm going to click GTC. I'm going to click on that wick right there, and I'm going to click on that wick right there. You can see we need to get above it. If by chance the futures open higher tomorrow and we're off to the races, we could see nice consistent price action, and it will be fueled by that bullish flag formation. However, know that the market is a little bit tired after a big run from this low. You can see the tiny little candles in here. I'm expecting the rest of the gains for the rest of the year to be very hard fought. We also have the FOMC starting to taper, and the possibility of tightening comes into play somewhere in the middle of 2022. Those will be market headwinds. I don't think they're going to really come into play in the next few weeks. So I'm looking for opportunities. I'm looking for any dip to be able to reload on some of these bullish put spreads, focus on stocks that have relative strength. Netflix certainly qualifies. So you can sell an out of the money bullish put spread on Netflix, keying off of that 650 level. We kind of want to see this 670 support level hold up, but we're going to need a pullback in the stock to be able to get a decent credit for that credit spread. So we need a little bit of weakness. We need a little bit of a pullback. If you're day trading Netflix and you come in and you see that relative strength preserved tomorrow, that's what you're going to be watching for. So let me give you another classic example of how context is very, very important. You're near a market high right now. So what you do not want to be buying into is opening gaps higher because they are frequently faded and we are in the late stages of this rally. What do you mean late stages of this rally, Pete? For crying out loud, this market is going up like mad. When I say late stages, I mean this is your pullback, this is your rally. We're in the later stages of this part of the cycle. Just like here, there's your pullback, there's your rally. These are the late stages. There's your pullback, there's your rally. These are the late stages. This is where we can expect these dips to happen. This is where we've got to be a little bit more cautious. But once we get the dip, once we've confirmed support, now you can get back into more aggressive types of trading. So in here, I still think we could see a little bit of a pullback over the course of the next few days. But in general, I'm expecting the market to just creep, creep, creep higher. No big market declines. If we get anything in here, probably going to be a 1 or a 2 day pullback. So if you're day trading tomorrow, do not chase opening gaps higher. You're almost always going to have an opportunity to buy. So you just need to be patient. Just like there's your opening gap higher on Friday. If you came in and you're all hot and bothered, you needed to load up on all your stocks, you probably regretted it an hour later because the market pulled back. But this pullback is critical for us because as the market pulls back, this is what gives us time. It buys us lots of time to take a look for those stocks, to find those stocks with heavy volume, technical breakouts, and relative strength. And during a market pullback like this, they're easier to find. Market down, stock up, super. That's the one that I want to be in. So Netflix, prime example, we see that market pullback on Friday. And what's the stock do? Well, the stock pulled back, but it was starting to rally in here when the market was starting to lift off, or excuse me, it was pulling back right here and lifting off when the market was still trying to find support. There's the market pulling back. There's Netflix holding its own. This is what you would want to see tomorrow if you're buying Netflix for a day trade. You would want to see the market open higher, pull back, establish support, and all the while the market is pulling back like this, the stock is tick, tick, ticking higher because as soon as the market finds support, see you later. So the things that you need to be mindful of, what's the context of the overall market on a daily basis? What's the context of the market on a 5-minute basis? Do we have an inside day? Do we have a tight trading range? If that's the case, then you better set passive targets for all of your stocks because they're not going to have that market tailwind. The next thing you want to be mindful of is you want to be watching for relative strength. I've already beaten that horse to a pulp. So let's move on to the next one. Heavy volume. You want to see stocks rallying on massive volume. You want to see these technical breakouts on heavy volume. Technical breakout can be on a daily basis. You need to have the daily basis, in my opinion. And then you want to be watching for those breakouts intraday as well. Bullish flag, downward sloping trend line breach to the upside, beautiful. Stack long green candles, prior day's high, breach to the upside, beautiful. Bullish flag, beautiful. Bullish flag, starting to peter out. So now you've got your technical breakouts coming into play as well. And then finally, what's the overall price action like? Is the stock super choppy? Is it nice and orderly? Riot was a nice one. Look at that nice orderly stack candles, compression, stack candles, compression. This is what stocks do a lot of times. And someone asked me if a stock starts to lose its relative strength, do I have to get out of it on a time stop, which I use for futures if I'm in the trade and the futures trade is not going anywhere, I will use a time stop because futures tend to be much more random and a lot more volatile than a stock per se, because a stock that has great relative strength and heavy volume breakout will tend to retain that strength throughout the course of the day. So if you see this and you buy here, well, if the market were going higher and the stock were just compressing like this, you can hang on to these because they'll eventually release. And this might be a good example in here. Not really. The market's compressing, the stock's compressing. I do give stocks more time to break out than I would the S&P future. So you got to stick with these because after a big run like that, you're going to see some profit taking. Stock has to digest the gains. Eventually, buyers start getting more aggressive as they see that there is not going to be a big pullback for them to buy. They know they've got to get some stock off, so they just keep raising their bids until finally the stock takes off. I hope this has helped you. Netflix looks good to me. I really like it for tomorrow. I think that's going to be a good bullish put spread. And if the stock has relative strength early in the day and the market backdrop looks strong as well, look for entry points on Netflix. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.